What are the 10 worst states for retirement? You're going to find out here today at the Heritage Wealth Planning YouTube channel, the 10 worst states for taxes for retirees. We're going to dive right into. Thanks for coming to Heritage Wealth Planning, my friends. If you like what you see here, please go ahead and hit that little button down there for subscribe. But you can't just subscribe. You got to keep going one more step, which that notification bell, I believe, is down there as well. The little bell to be notified. As I have some subscribers that I follow, and I was like, man, what happened to these guys? Are they off YouTube or what? It turns out I had forgotten to hit the little bell to be notified. And some of these guys, I really like their content quite a bit. So I want to be kept in the loop of what they're doing. So hit that little bell to be notified as well. All right, so let's dive right into it, my friends. So today we got 10 in a specific order. I just took some pretty good notes here. And of course, I've done a state-by-state analysis of each state in terms of taxes for retirees. So you can go back to the channel and look at those on the playlist, how states tax retirees. So let's start with number one, and that's going to be Connecticut. Yeah, Connecticut is quite bad, and bear with me while I find my notes here. Let me back up. The one thing I do want to talk about when it comes to taxes is property taxes are the biggest one. A lot of people pay attention to income tax, and rightly so. Income tax is the third of the three that concerns me most. Property tax, sales tax, and then income tax. And the reason being, income tax, you can do a lot of manipulation. You can wait and take Social Security later because Social Security is taxed much, much more favorably than any other sort of income. Start doing Roth conversions while your income tax bracket is low. All kinds of things you can do from a tax perspective when it comes to income. Sales tax, if you live in Maine, you can go down to New Hampshire. Live in Massachusetts, go up to New Hampshire. A lot of these places don't tax groceries, which is a big portion of your sales tax as well. So sales tax, while more pertinent, I think, than income taxes, you can still do some manipulation to get around it. Now, if you're in the middle of Kansas, you really can't go to Missouri or anything like that to avoid sales tax. But still, at the end of the day, you can grow your own food, for instance. If you grow your own food, there's no sales tax. Now, again, a lot of states don't tax groceries anyway. But the property tax, there's nothing to do about it. If you own a home and your home is, say, $400,000 and they tax it 1%, and there's no homestead exemption, you're going to pay $4,000 a year in taxes. And I assure you, that's going to be the biggest expense when it comes to taxes that you're going to come up with by far. In fact, you can run the numbers any which way you want. But if you have income less than $100,000 and say a good amount of that from Social Security, you're not getting anywhere near $4,000 of taxes paid, not at all. And the property tax is paid each and every year, regardless of what your income is. Now, again, some states have homestead exemptions, some states don't. Some states will give you credit on some of your property tax, some states won't. And the ones I'm going to talk about here today don't much. But that's the big thing is property taxes. And secondly, a lot of people say, but I can write property taxes off, Josh. No, you can't if you're taking standard deduction. With the new standard deduction rules, because the standard deduction is so much higher than what it was, most people are not going to be taking itemizing their deductions. They're going to be taking standard deduction. So if you have married filing jointly over the age of 65 and you have $26,600 of standard deduction, if your property tax is $10,000, you still got to come up with another $16,600 of itemized deductions just to equal your standard deduction. Not likely to happen. So the vast majority of retirees are not going to take itemized deductions, since that means they're not writing off the property tax. All right, so let's dive right into Connecticut. They have the number 2 highest income tax. Sales tax is moderate. Now they hammer you on gas tax, so they're number 9th highest on gas tax. So if you do any commuting in Connecticut, not a good place to get gas. At least on the sales tax, they do exempt groceries, so that's good. So moderate sales tax with groceries exemptions is good. In terms of their property taxes, through the roof. In fact, number 1 depends on what county you live in, but generally in the top 3. And that's just bad. You're going to get killed in Connecticut property tax. If you're married filing jointly and you have over $20,000 of taxable income, you're in a 5% tax bracket. Oosh. And basically, if you have income above $43,000, that's adjusted gross income too, by the way. You don't get a homestead exemption. So adjusted gross income of $43,000, you don't get any homestead exemption whatsoever. With that huge property tax, that's a pain. That's bad. No other way around that. Social Security is taxed if your gross income is above $60,000. Just look at my notes here. Social Security is taxed, and then all income, other retirement income comes out as ordinary income as well. So no exemptions on retirement income. Basically, no homestead exemption. high property tax, high state income tax. Sales tax is moderate, and then there is an estate tax too. So Connecticut is number one. Again, not the worst. I'm not doing that just in terms of what I wrote down here. So Connecticut is on the top 10 list. Number two is Vermont. Vermont's there, and again, a high income tax. Sales tax is moderately low, and they exempt groceries as well. Property tax is, again, in the top 5. So huge property tax, huge gas tax as well. Huge income tax. Just 2 of the 3 is quite bad, and again, the property tax is the big one. Social Security is partially taxed. If your income is above $63,000, it's taxable income. So taxable income is a little bit different than gross income, but still taxable income above $63,000 in Vermont. You're paying 6.8% is your marginal tax bracket. That's pretty steep right there. I can't even figure out the homestead exemption. It literally makes no sense to me. I tried every which way to Sunday. I can't figure it out. It doesn't even matter because if your adjusted gross income, again, not taxable income, if your AGI is less than $47,000, you don't qualify anyway. So Vermont, high income tax, high property tax, pretty high gas tax without basically no homestead exemption whatsoever, and just not tax friendly. Nebraska, I kind of thought about this a little bit. Initially, I said I'm not going to put Nebraska in there because their sales tax is middling. The gas tax is in the middle, and their sales tax, they also exempt groceries. So you're not going to get hammered from a sales tax or a gas tax, but the property tax is high. It's number 7 in the nation. Now, the difference between Nebraska property taxes and something in Vermont or Connecticut is significantly different because Nebraska, the prices are lower on the homes, but still, at the end of the day, number 7 is high for property tax. Social Security is taxed, as is all other retirement income, so there's no exemptions there to speak of. And once you break $60,000 taxable income, your income is at 6.84 is the in terms of your marginal rate. I mean, that's $60,000 married filing jointly puts you at 6.84. That's steep. So that is high income tax, high property tax, middling sales tax, and not much of a homestead exemption either. So Nebraska definitely falls in there. Again, I thought about, don't put it in because the property tax, the actual dollars you spend is probably low, but at the end of the day, that's high. Number 7 in the nation is quite high with basically not much of a homestead exemption. Wisconsin, going back to the Midwest, comes in high income tax. My goodness. Number 4 in the state, in the nation for income tax. Moderately low sales tax, which is good. And groceries are exempt as well. And very high property tax too. So number 4 income tax, number 4 property tax, gas tax is in the top 20. And this is where Social Security is not taxed, so good on them, but this is where they get you. If your taxable income is over $30,000, you're paying 6.27 is your marginal rate. 6.27 if you're married filing jointly. And by the way, these are all for married filing jointly. And your taxable income is only over $30,000. That's pretty steep. Basically, no homestead exemption I could figure out either. So Wisconsin, high property tax, high income tax, moderately low sales tax, gas tax through the roof. And it doesn't take much to get to a pretty high income tax bracket either. So not good. All right, so then we go to Kansas. Another one I kind of thought, and then I said I'm going to throw it in there as well. Sales tax is the 6th highest in the states. Property tax is number 15. That's kind of, I was like, well, the property tax in Kansas, it is in the top 20, but it is Midwest, so the property values aren't very high. But then you factor in a pretty high sales tax. I said I'm going to throw it in there. Social Security, so property tax is number 15. Again, sales tax is number 6. Social Security is pretty much exempted, which is good. Once your income breaks a certain threshold, they're going to get some of your Social Security. I'm not going to get that here. But once you break $60,000 for taxable income, then you're in the 5.7% tax bracket. And again, that's high. I mean, 5.7 for states on top of the 22% for feds. That's real money, my friends. I mean, that gets up there. I mean, that's 20% of your paying to the feds. You're paying also on top of that to the state as well. And again, over $60,000 of taxable income. You're not living like Bill Gates there. No real homestead exemption either. So moderately high property tax, but no real homestead exemption plus a high sales tax. Kansas falls in the top 10. Looks like we're going to let's stay in the Midwest. Minnesota is actually quite high. Income tax is number 8 in the union. Sales tax is number 17, and property tax is number 19. So for the big three, sales, income, and property, they're all in the top 20. Social Security is partially taxed. Retirement income is all other sorts of retirement income is fully taxed as ordinary income. Not much of a homestead exemption either. And so with that high property tax and minimal homestead exemption, tough, man. High sales tax. And then, and actually, I didn't write on here if groceries are exempt or not. I hadn't written that down. So I don't know about groceries, which if they weren't exempt, that's a big deal. And here's where they kill you on the income tax side. We already talked about the property. If your taxable income, married filing jointly, is over $37,000, you're paying 7.05 to the folks in Minnesota. I mean, my goodness. So you got huge income tax, high property tax, and high sales tax. So you're in the top 20 in the negative way for everything in Minnesota. And actually, I didn't write the gas tax here either. My presumption has got to be high gas tax too. So now we're going to go to the Northeast, Rhode Island. Rhode Island's done some clever things, actually, with their new governor, who I'm a fan of, by the way, in terms of income exemptions from non-IRA accounts. Just remember, non-IRA accounts. If it's an IRA account, you got to pay tax on it. If it's a non-IRA account and you're married filing jointly and your tax and your just gross income is less than $100,000, you can deduct $15,000 and your spouse can deduct or exempt $15,000. Not deduct. Take that back. Is exempt $15,000 per head per taxpayer if you're married filing jointly. So you can write out, again, exempt $30,000 of retirement income from non-IRAs if your AGI is less than $100,000 in Rhode Island. That's brand spanking news. That's a big deal. Unfortunately, they still have high income tax outside of that. But we already talked about the exemption. Huge gas tax, top 10 in the country for property tax. And to get a homestead exemption to Rhode Island, you need gross income of less than $30,000. Oh boy! So basically, if you own a home in Rhode Island, you're going to pay a high property tax. This is in the top 10. Sales tax is not that high. Groceries are exempt, but the high gas and high property tax. Oh, and they got an estate tax as well with a low homestead exemption. So they do tax Social Security. So all these things combined, I kind of thought maybe don't put Rhode Island there, but you got the high property tax plus no homestead exemption, plus your Social Security is taxed, plus the income tax is pretty high as well. They do have that pretty good exemption though. So Rhode Island's kind of iffy for me, but the high property tax is what did it, where I had to put it on there. All right, let's keep rolling. All right, so what we got here? Oh, and then New Jersey. I had New York on here someplace too. All right, so we'll go to New Jersey. Oh, there's New York. So New Jersey is the highest property tax in the nation. High income tax, gas tax in the top 10 as well. In fact, if you're married filing jointly and your income is over $80,000, you're going to pay 5.5. Then it gets progressively higher from there. Sales tax is moderate, not anything through the roof, but they do exempt groceries. That's good. It's just a property tax. They give you pretty good exemptions now in New Jersey for income. That's good. But the property tax, number one in the union, is through the roof. And I mean, if you got a $400,000 home in New Jersey and you're paying $7,500 a year in property tax, the exemptions aren't, without much of a homestead exemption, and there's hardly anything at all, that's punishing. And I don't even care what kind of exemptions you got on income. You're going to have to come up with that money somehow. And the way you're going to come up with it most likely is to take money out of your IRA. So New Jersey which is taxable even more. So New Jersey is bad when it comes to property tax. And so you got to throw them in their top 10. New York is, hold on just a second. All right. So sorry about that. I had to pause the video for a second there. So we got two more in New York. Property tax is higher in the state of New York without question. In fact, if you make over $23,000, and the income tax is high too. In fact, they're the highest income tax in the nation. If you make over $23,000 in New York, that's taxable income, you're paying 5.25% income tax to the people in Albany, and it gets progressively higher from there. $23,000. That's married filing jointly, by the way. Eesh. High sales tax, high property tax, high income tax. So New York is probably going to be in there with Minnesota, the top. Probably three without question. Probably New York, Minnesota, Connecticut, and Illinois. New York, Minnesota, Connecticut, Illinois. I have to think about the last one. New York, did I say Minnesota? New York, Connecticut, Minnesota, Illinois. Yeah. So New York, high property tax, not much of an exemption. high income tax, and they get you, real low in high sales tax. So it speaks for itself. Illinois is the last one, and again, not in any rank of top 10, but Illinois probably in the top 5. Income tax is actually not bad. I mean, the income tax, and I did a video on that. If you're looking at Illinois versus Indiana, for instance, from our income tax, Illinois looks better without question. But the second highest property tax in the nation after New Jersey. And again, that property tax is going to eat you alive. And I just read someplace too that they added a additional tax on that as well, which is going to you're not going to be able to sell your house in Illinois if they don't do something about those property tax. Pretty high gas tax, and sales tax is the number 7 in the nation as well. So Illinois, high property tax, high gas tax, high sales tax, moderately low income tax for sure. And that's good. But you can't, if you can't sell your house because the property tax is so high, you're in a world of hurt. So that's my top 10, my friends. We got Illinois, New Jersey, New York, Kansas, Rhode Island, Minnesota, Wisconsin, Nebraska, Vermont, and Connecticut. So that's my top 10. As you're contemplating where to retire, you got to look at property taxes. So look at the property tax, not just the rate on the state, but you got to look at the property tax for the county as well. And I use an example when I was looking at Virginia. In Fairfax County in Virginia, it's like 1%. But if you go to Rockham County in Western Virginia, it's 0.55. So in the state, the Commonwealth of Virginia, the average property tax is higher than you think. You just got to look at the county. But then you also got to look at homestead exemptions as well, because if you live in a state with a large homestead exemption and you can qualify, that's going to take some of that, alleviate some of that burden off you as well. So hope you like this, my friends. I appreciate you joining on board here today. If you like what you see, subscribe down below. Don't forget to hit the notification bell to be notified of future content. We try to do 5 videos a week, if not more. Thumbs up, always helpful. If you got comments, man, put them down below. I've had a couple of people comment from New Hampshire, Tennessee, and some other states as well. That's helpful to me and whoever else watches these videos. It's not just me doing it. Other people watch it. So definitely put comments below. See you next time on the Heritage Wealth Planning YouTube channel. Thanks, guys.